Yo, good morning, traders. Happy Thursday. It is July 30th. I hope you guys are ready for a killer trading day, ready for a great trading session, and ready for an amazing market in the morning. We have the one and only Jeeve joining us. And no, he is not clickbait today. He is actually in the building with us. We're going to break down markets. We have PCE data in just about 10 minutes. So, guys, if you're ready to make some money, smash that like button because market in the morning starts right now. Gee, bro, good morning.
What's going on, Kevin? Thanks for having me, bro. Always a pleasure. Always here to share value and, you know what I mean, walk the community through my trade ideas, process, teach them fundamentals, and keep them locked in.
That's it, man. That's it, bro. I'm excited. We have PCE data in a few minutes. Let's dive right into it. Give us your insight.
Yeah.
Where are you positioned right now? What's going on?
So basically, we've been seeing that a lot of the max pain of the war has been priced in. Any continued missile attacks back and forth, it has a little bit of impact, but it's been decaying. Oil's back to near pre-war levels and in bearish structure. Natural gas is at 3-month lows. Manufacturing prices paid down. Supply chain is starting to normalize a little bit. And with that being said, we even noticed a little bit of a Trump taco supporting this, where there hasn't been any major escalation trigger fired off. No ground invasion, no NATO countries getting involved, nothing of that nature. Now, we also predicted that FOMC could be neutral to even dovish tone. There was tons of expectations that there would be a rate hike or a lot of forward guidance of hiking rates and tightening financial conditions. But that made no sense. All of the data from CPI trending lower, energy lower, services prices paid down, manufacturing prices paid down, NFP miss was still showing us that the Feds can support looser financial conditions. Now, there has been a little bit of noise and the markets has been consolidating. Gold has been going up and down in the same range. Stock market's a bit of a higher time frame consolidation. But to me, that's all it is, a consolidation. I still see buyers accumulating on gold, buyers accumulating on the stock markets, dollar more bearish, oil more bearish. Market focus shifting from an energy crisis and rate hike fears back to rate cut bets and supporting the greed train in AI. We even saw Kevin Warsh himself and the Fed board very pro AI. Kevin Warsh isn't pro AI because he loves the technology and he's an engineer. He's pro AI because he's investment positioned that way. And this is a pretty clear playbook and narrative for the politicians, the corporations, the central bankers. They're all on the same page here of keeping the AI tech sector compute greed train running. So today we have a collection of data. We have GDP, jobless claims, and PCE price index. GDP may still be resilient, giving us a little bit of trouble on our gold buys and dollar bears. But I think that PCE price index can be lower, on forecast or lower, showing signs of disinflation, fading rate hike fears. Jobless claims can edge aggressively higher or be back well above the 200K range from the previous low figure, which was a bit of a manipulation when jobless claims fell to 60-year lows. I think that was purely setting up prices and data releases going into this week. So if we can get neutral GDP, even slightly lower tick on GDP, if we can have the inflation data cooling as well as jobs data weakening, now we have the perfect recipe here on top of a neutral FOMC and the energy crisis priced in for more gold buys, Euro USD buys, GBP USD buys, stock market buys from these dip lows, discount demand zones, and of course, dollar more bearish. Now, I'm only going to watch for any reversal risk or flip my bias if data goes against my prediction. So right now, let's just be cool, calm, and collected. We already have the New York session underway. Not much action on dollar pairs, gold, or stocks at the current moment. Let's wait for the data to get released. We have jobs reporting, growth, and inflation at the same time. So you can get conflicting data, which can create a little bit of lower time frame noise. We never want to trade the data release itself. We will either want to position ahead of time with predictions or trade the price setups afterwards. Price is always the primary focus point. So my main prediction is jobless claims higher than the forecast of 200K. PCE price index monthly right at minus 0.1 or even minus 0.2. Yearly price PCE price index right at 3.7 or even a 3.6, and still fading some of the rate hike fears, pushing any potential rate hikes way down the line, even sneaking back some of the rate cut greed. Today, we also have a collection of earnings from the big names, and that could also further support the greed in the tech sector, semiconductors and compute rebounding as well, and a rotation out of energy in the defense sector and out of dollar and back into gold, risky assets, Bitcoin, and so forth for more discount appealing pricing.
Interesting, man. I like it. Let's break right into it. Somebody's asking, what's the prediction? You want to pull up our playbook, see what's going on there?
Yeah, like I was just talking about the prediction. So this guy might be a little retarded, but let me.
Gee, we have new rules since your last.
Oh shit! My bad. But let me share my screen. I have to share. I was sharing the wrong screen. So let's just focus on the data coming out here. Where for PCE price index, initial jobless claims, these are the main ones I'm looking at. Let me zoom in a little bit to make it easier for these guys to read on the screen here. So PCE price index monthly, yearly, and jobless claims is very important. Then GDP is the next set of importance, and then the core figures are last, but still important to keep an eye out for. Now with the playbook, you can see one click button here. I'm personally going to be trading gold. And if, for the example of PCE price index month over month, we can see that the data comes out above 0.2, which would still be showing signs of disinflation, but not nearly as strong as what the market was anticipating. This can still lead to some gold bears. Gold can still be bearish in the range, like the market bias is suggesting, of bearish, but to look out for a reversal risk, as we have just been consolidating on gold for a couple of weeks now. But with services sector inflation down, energy prices back down, natural gas at 3-month lows, we're seeing manufacturing prices simmering down, and the global supply chain starting to heal a little bit. If these inflation figures are lower, it's going to stack on to the neutral to dovish FOMC from yesterday, and it's still going to be very bullish for gold, especially if we exceed what most calendars don't have on inflation dropping below the minimum expectations. GDP, this is the minimum band. And on initial jobless claims for more impact to support our bias, we'd want it above the maximum band here. Now, the beautiful thing about the market calendar is it shows you what's high impact. It shows you what's coming up next for your eyes to focus on. You have your forecast, but most calendars don't have a min-max. The min-max is what really teaches you about market conditions, how much volume and volatility you're going to have that can potentially support your trade or take away from it, giving you steps to either risk manage or take more risk and be aggressive with more risk. And then our playbooks of how much an asset may move is based on the outcome and the change from min and max. So for initial jobless claims, and I trade gold, if I want gold to be very bullish off an initial jobless claims report, it needs to come out with an outcome above the maximum of 215. But we just have the data coming out in 1 minute. So let's just see how it goes. We could get mixed data. My prediction could be dead wrong. I'm just a man with the plan in the market show here. But what are you looking at? What have you been keeping an eye on?
So, man, listen, I'd hate to disagree on the stock front, but seeing where the NASDAQ's at, seeing how some of this big tech earnings has been coming out, I'm actually leaning a bit more bearish still on overall trend. NASDAQ's below 10% from its all-time highs, which does officially put it in a bear market. CapEx has been extremely high.
Stocks bouncing from here today.
Right?
Stocks bouncing from here today, buddy. That's the low.
This is the low?
The low is in. No, I'm kidding. But anyways, so initial jobless claims, it's lower than forecast, but still rising by prior. So that's neutral. But we can see the inflation data is still looking pretty good. We're just right on forecast across the board. Now, because we're right on forecast, there's not going to be huge market volume and volatility. It's going to be pretty much in line with expectations. But the good thing here is that we're still seeing a significant decline on prior and on the monthly and yearly prior compared to the actual. And what's also very notable is GDP is down well below forecast. And when you're breaking down the PCE report, even excluding energy, it's well down below the previous. Core PCE price index is down below the previous. And of course, we have the core PCE price index monthly below forecast. So we might get a little bit of liquidity grabs and price setups, but I still think once the noise and dust settles, as we're well underway, the New York Open, the Commodities Exchange Open, and going into the Cash Open, after some slight retracements, I'm going to be looking to play dollar bears. So coming to our beautiful dashboard here, and for me trading like Euro USD, for example, you can see Euro USD is a bullish bias. It's been bullish because we've had the weaker CPI. We've had the Feds go more neutral and potentially into a rate cut mode, fading out some of the hike fears. And we have more bullish factors here, giving us a respect to a bullish support in a great target range to play. So for the Euro USD traders, I would be a little bit patient waiting into the Cash Open and afterwards, but I would love to play some dollar bears. And you can use the same fundamentals on GBP USD or USD CAD, but the price wise, I'm going to be following the market scenarios given right here. Beautiful ranges to play of looking for a slight reaction at this current level, either a failure to break 1.114, pop up back above the support level given to you right on the screen from market, and still have a great range to 1.116. Now, this would be a fantastic positive risk versus reward trade where if we get this reaction, don't break below here, this becomes the invalidation point. This becomes the entry point, and this becomes the TP. Now, we also have to keep in mind a scenario of retesting 1.14. Regardless, I would be looking to play and attacking the buy side for 1 to 3, 1 to 4 RR trades from the levels that I agree perfectly with market here. And you can see it would be very positive where we have these drawing tools integrated where your invalidation would be below here after a pullback and going to the target levels, a positive RR trade, even better risk versus reward if we get the deeper pullback down to here and can run it back up to 1.16. Now, we have strong bullish price action on Euro USD, weaker dollar, neutral to dovish FOMC, dropping energy prices, lower inflation figures, weaker GDP. We're just looking for the price action and the optimal timing. You never want to trade right into the early release of the data. You want to let the impatient traders get swept out, and you want to wait for optimal pricing. Price is a part of fundamentals. Waiting for the optimal price is also how you exercise your patience and grow your discipline. So adding on to these scenarios, I'm looking for just a short-term lower wick, even the next hourly and 4 hour. Failure to really either hold below 1.144, break and retest with the entries above 4.8 on instant breakout, watching validation to hold further with the price action development, or I'm looking for this with these beautiful risk versus rewards, playing the bias given to me, playing, of course, the data releases here where GDP dropped, and that can be bearish for the dollar. And we have these fundamental drivers that we can use to give us more confidence and conviction to maintain positioning, not start second guessing or doubting ourselves when it comes time for the market to do the heavy lifting after your execution. But that's what I'm going to be setting up on Euro USD. I am going to be looking for some gold buys and SPX buys as well, while keeping an eye on the news feed. And then going through the news feed here, we do still have PCE price index, and even excluding this is a really notable one, is there's been a lot of attention on the energy impact on inflation. And of course, that's what's attributed to inflation being a lot higher. But even excluding energy, which is bearish now and flat, natural gas is back down to 3-month lows. You can still see PCE is trending lower. And the previous was 4.8. We dropped to 3.2. So inflation has peaked from the peak war period, prime war period. It's not trending any higher. It's starting to come back down. This is full reasoning not to hike rates, especially with strong earnings around the corner, discount prices hit on the higher time frame on gold, Euro USD, other dollar pairs, Bitcoin, and the stock markets as well. But I don't want to be yapping too much. Hopefully that makes sense to everybody. They understand the technicals, fundamentals, timing. But I want you to share your screen and give us what you're looking for.
Yeah, no, for sure. 100%. You know, something I want to touch on too real quick before we dive into any more charts or anything. We've had some updates to market overnight, and I just wanted to cover them. It's up to you if you want to share your screen and cover them.
No,
but
you share your screen. It's all good.
Awesome. Cool. So obviously, guys, a lot of people, there was some confusion between like, oh, well, the market bias says slightly bullish. Why are we selling off? So we ended up trying to fix that, right? Our goal is to make things as simple and yet as easy to read and accurate for you guys as possible. So if we see something like the S&P over here for bearish, it's giving you a reversal risk, right? Fresh, and when you hover over it, it will tell you fresh news or an upcoming event is pushing the other way, so the bias could reverse soon. Tighten your risk. So I absolutely love this update. Big shout out to Noab for this. This is phenomenal. On top of that, there was also a beautiful UI update to our bias and calendar events down here, where same thing, it's telling you the bearish reversal risk, a clean UI shift. You could hit show more headlines, hide more headlines, very clean, easy to use. And if you don't really understand something, well, what's higher long dated treasury yields lift real discount rates on equities? What's this mean? You hit explain, it gives you a market analysis on what's changing or holding the bias. Extremely cool update. Really just keeping market ahead of the curve there in terms of everybody else in this industry. Are you already in? Saif is asking if you're already in EU. You in Euro?
No, I specifically said direction that closer to the New York Stock Exchange open, I'm going to wait for the next hourly and 4-hour candle on most brokers to form some type of a lower wick, which could just have a short-term double bottom being created on that Euro USD chart, or even retest the lower demand zone, then execute. Even though the fundamentals are bullish, the technicals are bullish, as a day trader, timing and price is very important for your execution. You cannot just mindlessly enter. A pullback could fade you out. So don't just follow the directions and only have your monkey brain go off when a price is heard and you think you can just instantly enter. You have to follow the directions on attacking, defending, psychology, timing. The market is very intricate. The market is not black and white. The market, by design, has to create more losers than winners, has to create uncertainty with positioning, has to flush out the impatient traders. Otherwise, there would not be a market. It wouldn't exist. So you have to understand you're coming into a game that's extremely corrupt, driven by higher powers, driven by the people in control at the very top of the food chain. And there's a reason there's a 90% failure rate from retail traders. It's due to a lack of understanding and poor expectations set by social media. Social media trying to advertise everything as easy, black and white, just all simple passive income, low effort. But that is not true. The markets is the hardest job in the world. The market is the most strict boss and the most ruthless boss in the world as well.
Yeah, absolutely. Absolutely. And we got to be prepared for it. That's why we got to treat trading like a business, guys. You treat it like a hobby, it's going to pay you like a hobby, and that's not going to be much. You treat it like a business, you're going to see some follow through. You're going to build structure, build routine. You're going to have tools that help you. So yeah, really great stuff. Good stuff. Yeah, we don't want a monkey brain, guys. We want to use our human brains. Awesome, man. Cool. Great breakdown. Jeev, anything else you want to leave us off on? I know you got to leave in a little bit.
No, just like mainly still sticking with more of a risk on environment for today and the rest of the week and going into next week. Keeping a vigilant eye on headlines if there's any war headlines that are a critical escalation trigger. Now, this is good for you guys to understand. There's going to be tons of war headlines. There's going to be tons of attacks going back and forth. But just because the news is reporting on it doesn't mean it holds market impact. The market view of events and the mainstream view of events are two different timelines. What do I mean by that? Well, for example, Russia versus Ukraine war is still going on to this day. There's reports last night about drone attacks between Russia and Ukraine, but it has zero market impact. And Russia versus Ukraine hasn't had market impact since 2022, right? The Iran war is going to go through a similar pattern. 3 months ago, every headline with the war was holding tons of weight because it was fresh, a fresh risk premium for the markets to digest and absorb. But the markets move on very quick as speed is their edge. They're moving 2 to 3 steps ahead of the mainstream, even wanting to be 1 step ahead of their competition in finance, as this is a dog-eat-dog world. So they price in events quick. They price in the max pain, the worst case scenario very fast, whether it's a trade war, a real war, or whatever. So there could be more missiles back and forth, but that doesn't mean there's going to be more market impact. Some of you might see every missile headline and keep trying to buy oil, but then oil goes bearish and you're angry. This is why. Eventually, events get priced in and the impact decays, right? So with that being said, what would be a critical escalation trigger that would have impact on the charts with the Iran war? 1, if the U.S. announces a ground invasion. 2, if other countries like the NATO countries get involved in the fight, get involved in the kinetic warfare. 3, if another critical waterway like the Strait of Al-Mandeb gets blockaded by the Houthis or gets blockaded by Iran. This would be new risk to the global supply chain and be fresh tensions to price in. If it's not really hitting those events, more missiles back and forth, more drones back and forth on the same sites is not going to hold any more market impact. So that's why I've been a bit more on the optimistic side, flipping into a gold higher time frame bullish bias, dollar expecting some bears, starting to look for some dip buying opportunities on Bitcoin and stock markets. Bitcoin over the last couple of weeks, stock markets over this last week.
Awesome. Jeev, we got a couple questions. Let's break them down. The first one comes from Piyush. Says, question, Jeev, I've seen your recent tweets about conviction in your analysis. Even though it made it tough for you to get a clear move, what psychology lessons would you share with the audience that can help them level up their mental toughness?
So conviction does not come from a level of toughness or me being mentally stronger than you or vice versa. Conviction comes from knowledge and planning and preparation. It's like an athlete such as Kobe Bryant who has such supreme confidence when it comes time to perform because he knows he put in the work. He knows he didn't miss a single session of practice. He knows he was getting the proper nutrition and rest. He knows he studied film and studied his opponent as much as he could. He knows the weaknesses of his opponent to exploit and the strengths of his own to further leverage and take advantage of. This is the same thing in the markets. The more you're involved in the markets with intentional work, actually studying the financial part of markets, the economics, the macro, the fundamentals, and bringing it together to the charts, the clearer your vision becomes. The more clarity you have, the less doubt, the less confusion. Therefore, through repetition and getting the practice in, your conviction grows. So you could say your mental toughness and discipline grew, but it's really you developing your knowledge, seeing your knowledge play out time and time again, getting those reps in, and knowing you prepared to the fullest and understood the risk and potential worst case scenario ahead of time. When you can become very comfortable with the worst case scenario and then have confidence in what you're predicting, rooted in objective fundamental research or technical positioning, this is conviction to be able to weather the storms of price volatility. Price action alone is designed to cause you doubt. Price doesn't just move up in a straight line or down in a straight line. It can have huge whipsaws. It can have huge uncertain moves. You could be in profit 500 pips, come right back to your entry. That's by design. That's designed to have you maybe second guess your position. Close early. Close your buy and flip to a sell. It's designed to cause confusion, panic, uncertainty. So how do you clear the noise of technicals that are designed to potentially confuse you? You bring clarity with fundamentals, right?
Nice.
So then you use the technicals and fundamentals together. I'm only going to execute at key points of market structure, key zones identified technically, optimal discount prices for a buy, premium supply resistance zones for a sell. And then as I execute, I'm going to weather the storm of price volatility because my confidence is in the fundamentals supporting the trade and letting the markets do the work and the heavy lifting of price movement. So when I'm up 500 pips and price comes back to my entry, I don't panic. I don't close. I don't second guess. I maintain conviction. I weather the storm because I'm looking at something bigger than a quick 15-minute price action move. I'm not scalping 2-minute candles here. I'm day trading for multiple sessions, multiple days, trying to hold positions for a week or two if I can and if the market allows.
Awesome. Awesome. And last question we have for Jeev here. We might have time for another one after this, but can we see Jeev's prediction on gold?
So with gold has been ranging a little bit. It's in a bearish reversal risk here. Now we can but overall, to keep it simple, it's in a bearish reversal risk because we're in a consolidation. We have not been printing any lower lows. We might see short-term bears, but then a hard reversal come in. Why would the hard reversal come in? Well, we're failing to print any new lows. Higher time frame bias is bullish. We have lower inflation, neutral Fed, war priced in. So we might see a little bit of downside in the consolidation and then start to buy. I'm going to be waiting for the pullback buys for the flip watch here and for the data that can flip the bias because the risk of flipping is increasing more and more as we speak.
Awesome. Awesome. Yep. John says white belt is 90% physical, 10% mental. Black belt is 10% physical, 90% mental. Same for trading. You know, you're when you're first getting started with trading, it's really 90% learning the technicals, how do things work, but then and fundamentals. And then once you get to that point, it's that 90% psychology.
100%. That's true.
Warsh kind of sucked yesterday. Yeah, bro, kind of sucked is the understatement of the century, man. We're going to have some crappy FOMCs every 6 weeks now.
Warsh is it's okay. It's just we just have to, the same with Powell and the same with Trump. You have to take everything objectively and through study and research, you just have to learn the person's personality and their antics and their quirks, right? What do I mean by that? For Trump, we know Trump's psychology and Trump's playbook, whether it's the Iran war or trade war. What is that playbook? He explains it in his book, Art of a Deal. Trump comes out whenever there's a problem and makes either the problem look way worse, way more severe, way more uncertain, and causes that panic. Whether it is he's threatening China tariffs 150%, whether he's threatening to blow up power plants in Iran. This leads to some dips on stocks, uncertainty and panic with sentiment. And then a day or two later, he comes and provides a solution and looks like a hero and quickly pivots to go, never mind. I'm not going to tax China. I love China. We have great business together. Never mind. I'm not going to bomb Iran. We're doing a ceasefire instead. That's Trump's psychology. Now, if you don't learn his psychology, you're going to be very annoyed because you're like, man, Trump's a piece of shit. One day he's bullish, one day he's bearish. But that's just because you're not adapting. And adapting to these politicians or central bankers that impact price should be a part of your job. So with Powell used to be very slow, neutral, monotoned, wave back and forth, speak in the serpent's tongue to maintain price stability in terms of not shocking the markets. That's his personality. He's more old school. That's the way he delivered communication to us. But Warsh, he's showing us so far, he's a little bit more cold, cut, to the point. Doesn't really waste time. Even the statement is smaller. This doesn't mean that it's going to be bad to trade him. This is just what you have to adjust to with future expectations. Expect he's going to be direct. Expect there's not going to be forward guidance. Expect he's just going to look at how the data is and give the answer. Right? So it's all about understanding political psychology, the market psychology, and adapting to what's going to impact your trading, knowing when to attack, when to defend.
That's awesome. Awesome, bro. Always great breakdowns. Always happy to have you on these streams. We got another one from a B over here. It says
core PCE data is not high. Core PCE data has peaked and is trending lower. CPI is lower. PPI is lower. PCE inflation data is trending lower. Energy prices are back to pre-war. What does this mean? While GDP is weaker and jobs data NFP was a miss, that the Fed should not hike rates. You hike rates when you need to combat aggressive inflation. The Feds already have interest rates in a restrictive territory where rates where they are right now can bring inflation down still. The only abnormality we had was the Iran war, energy price impact, global supply chain impact, which has been faded out so far, equally corrected. So we are seeing that was the reason why the Feds were a little bit more neutral, monotoned, and did not hike rates and did not even talk about any rate hikes. And we saw Kevin Warsh say that there's good progress with inflation. So it's going to support more loose financial conditions. The liquidity tap remaining on, potential dip buying on stocks at the higher time frame demand zone, gold starting to turn bullish with central bank purchasing demand, dollar seeing more outflows.
Awesome. Awesome, man. Guys, this is phenomenal stuff. Any questions, guys, make sure you drop it in the chat now. Jeeves got about 10 minutes left to give us his great knowledge. So pick his brain, ask some questions. Make sure you spam that like button for him. Show him some love. Let's run into 100 for Jeever. He said he's not coming back.
Yeah, make sure you guys comment, like, share this around, post it on your social media, and I'll make more appearances. We'll do more fundamental crash courses, live trading entries, real-time analysis. You know what I mean? I'm just keeping an eye on headlines right now. We do have a little bit of Iran headlines in the mix, but it's noise to fade out. Bank of England, Bailey at the moment, but they're not talking about hiking either. So you can see the central banks following a similar tone. We are not talking about an insurance hike. We don't have any reason to do that because so far the energy crisis concerns have dissipated, minimized, inflation has peaked and is potentially coming back down.
Awesome. Awesome. Do you have any trading plans today for XAU USD?
Yeah, I'm holding buys from 39.50 and 4,000 still in the higher time frame and scaled in at 4,040 as well.
Awesome. You want to share your chart, see what's going on there, give people little insights on that.
So basically we still have, this was the peak, higher time frame is still very bullish. That's not hard to see, right?
Yeah. Since the beginning of time, gold has never really been a bear.
Yeah, gold is still a store of value, designed to go up in value. Higher time frame is bullish. We've had a strong pullback phase to this bullish accumulation zone here, where we had previous strong market reactions take place here on the bullish side. We can see that take place again. We had this bearish retracement phase in correction, which was primarily due to the Iran war. Iran war peak here. Iran war mid here, late stages Iran war here. What am I showing you there? I'm showing you that the Iran war headlines have been holding less and less weight. We have no longer been printing any lower lows. We've been in a potential higher time frame pivot and consolidation phase. If we do not have any critical war escalations, continued neutral dovish toned Fed, outflow out of dollar, yields more bearish, back into rate cut mode pricing instead of rate hike, with the lower inflation data, weaker jobs, whether we retest the demand zone again, I'm starting to look for a shift of the bearish structure going into a higher time frame bullish structure as so, minimum back to 4,200s, 4,400s, 4,600s over the next days and weeks. Awesome. So then coming down into the intraday time frames, even looking at the 30-minute chart, I do want to start to see higher time frame bullish structure forming, maintain price above these key demand zones and break above this resistance, and see potential targets with the fundamentals at least through the end of this week, even into next week. Whether we get a reactionary double bottom here, a short wick and break above 4,080, I still want to be running the ranges up to 4170s, 4200s.
Sweet. And what's going on, brother? He says, hey, G, what are some pointers for fundamentals you look at broadly for bias?
All of the fundamentals drivers that I look at for bias are the same ones that are in market. It's the same ones about looking at central bank policy positioning, economic data, and how that data is impacting policy positioning, geopolitical events, or any other reactive events, whether it's political situations, wars like the Iran war, trade wars, and how that's impacting data from growth, inflation in the labor market. And then the most important thing is price.
Yep. Price is the response to the fundamentals, guys.
But anyways, I have to go run to an appointment. I want to thank you guys for your time. Thank you guys for paying attention. Hopefully that was an educational, informative, valuable webinar showing you guys my thought process, analysis, some educational fundamental refresher points, breakdown of technicals and so forth, answering your guys' questions as well. If you guys want me on here more often in the week, you want to ask me more questions, we can do specific training webinars using market and how it gives you an edge, whether with data, news, pricing, bias, conviction. Make sure you guys spam the like button. Make sure you guys spam the comments right now. And make sure you guys share this link around in your trading groups, trading chats, to your friends. Send it to your mom. Send it to your dad. Share it around. Market is a movement. We're continuing to improve, innovate, upgrade, simplify, clarify, and help you really have an edge as a retail trader, removing the friction of understanding fundamentals, removing that learning curve and roadblock so you can really have a true edge outside of just technicals and price action. We want to use both together, hand in hand.
Amazing, guys. Round of applause for you. Always great to have him on. Thursdays is usually his go-to day, so hopefully we get back on track with that. Oh. Awesome, guys. Great. Thank you. If you got to get going, you do your thing. Thank you for being here. I appreciate you. If you got a few more minutes, you could stay too.
Yeah, I gotta go. I gotta drive and get somewhere by 9:15 and then come back for the New York Stock Exchange Open super fast. But thank you, bro. Always a pleasure hanging out with you, man.
Bro, it's always fun. Always great talks, great conversation, and great insights for the audience.
Should I leave the studio or just turn the camera off?
Yeah, you could dip.
The recordings will be cool?
Yes, sir. We're good.
Okay, cool.
Take care, bro. Guys, what a phenomenal stream so far with G. We will keep the stream going into the New York session, dive into some NASDAQ, S&P. I'll give you guys my analysis on gold as well. Now, I do agree that there is a great opportunity for us to start turning more bullish on gold. Seeing that we have been failing to continue below that 30% pullback area that we've been seeing, I'll show you guys that right here on the chart for GC and XAU USD. So, yeah, if we zoom out to just February, sure, we're in a bear market. But just like G mentioned, we had extreme moves followed by an extreme move. All of this fueled by the Iran situation, inflation situation. But then every time lately, those moves have been getting weaker and weaker. Those headlines have been having less and less of a pull on what's actually moving markets. When that's the case, us as traders have to recognize what's going on within the price action, recognize what's going on within the fundamentals. Once we see that, we're able to recognize, that's when we're able to adjust our trading. Not every market condition calls for the same sizing. Not every market condition calls for the same positioning. Sometimes we're going to have to readjust and trade a more range-bound market. Sometimes we're going to have to adjust and maybe even go heavier in size because market conditions are more in our favor. But when we start going too heavy, when we treat every single day like it's the same as yesterday, things get a lot more difficult. Things do not play out. That's where inconsistency rolls in. People start getting very frustrated with their results. They're like, why does the market always stop me out? I was just killing it for 2 weeks, And then new headline comes out, things start rolling out, and they're like, oh my God, my trading strategy doesn't work anymore. Now I got to trade something else. No, guys, you keep trading the same strategy. You adjust how you execute. You adjust your strategy according to how the market's adjusting itself, right? We see that gold, huge downtrend. You could have sold almost anywhere at any given point on this huge move to the downside, held for 15, 20 an hour, and been in profit. Whereas when we come to this price action that we've been seeing over the past month since June 25th, and today is July 30th, look how range bound we've been here on gold. You don't have to be an advanced trader to understand that this is not a direction. This is range bound. This is sellers failing to bring us lower, buyers failing to bring us higher. Markets are at that coin flip situation where we need to see a strong catalyst to move us. If without that catalyst, we're going to continue in this range. This is one of the main reasons I've been staying away from gold this past month, is because I adjusted my trading. I said, okay, I know that when gold's trending, it's beautiful. It's a walk in the park. It's so much simpler trades. We're following the overall trend. It's an easy commodity and asset to trade given a good trend. When it's not and it's range bound like this, again, this is my trading edge. I don't have that strong edge in this type of market. In fact, I do much better with S&P and NASDAQ when they're ranging because I have other assets that give me confirmation that are within my edge. With that being said, Jeev is bullish on gold. I'm going to be very patient. I'm most likely not going to be forcing any trades myself. I do want to see, where are we relative to the open price? Where are we relative to previous day's high, right? Yesterday we had FOMC and we had this huge rally. Here's our 2 o'clock. They announced we're holding rates as expected. Markets rallied. Gold went over almost 2% to the upside from then. Did pull back extremely strong, right back to where we started. Since then, we've been chopping around. This is not a market where you want to take a long position at random and hope that it moves higher, or a short position at random and hope that it moves lower. When you're able to recognize and just zoom out on your chart and see, here are our highs, here are our lows. This is our no trade zone. If you've been here with market lately and you were here when Mel was on, she calls this her no-no zone, right? This is a no trade zone. We do not want to put risk on the table when it's a coin flip. When it's a no trade zone, it's a coin flip. You are not trading with an edge. You're flipping a coin and hoping markets move in your favor. When you trade with your edge and you start seeing something, let's say we do have that market structure shift. We break to the upside. We're creating some higher lows and higher highs on this lower time frame. Yes, you can start to trade this back to the upside if you have the right price target. You have good volume supporting it. You have a good fundamental read that's supporting that long position. Without any of that, you're really just forcing trades and hoping for the best. We don't want to shoot in the dark, right? We want it to be bright out. We want to have our night goggles on if it's dark out so we could see things clearly. So that's my thoughts on where gold is right now. We do want to be pretty careful with where it is. And look at that. See, if you took a random long thinking, oh, we're above the open, we're holding up, boom, pulled back, stopped out. Be patient. No trade zone right now on gold. I'm seeing resistance above us. I'm seeing support below us. No trade zone, rocking a hard place right there. When it comes to oil, oil had a very strong pullback since last Friday, pulled back 16%. Since then, starting on Tuesday, it has had a small move to the upside, still somewhat elevated. In my opinion, as long as oil does remain above the $75, even $76 mark down over here, it is still within that range of Iran escalations, higher oil prices, does keep energy prices elevated as well. If we look at something like the XLE, that's our energy sector ETF. Take a look at XLE. XLE, this is all-time highs on XLE over here, I believe. Let's double check on that. Make sure that we are correct on that. Yep, that's all-time highs on XLE. That's our energy sector. Now, when we think of higher energy, we have to think of all those big companies that are paying for higher energy. Do you think that Amazon, do you think that Google, Microsoft, Nvidia, when they have to pay for more energy, they're just going to eat that bill? No, they're going to pass it along to the consumer. And that's where inflation rolls in. That's where everything comes into play. And we're able to understand that and break that down because two reasons. We use market for our fundamentals and you join market in the morning every day to get those insights. We had a few more breaking news headlines come out here. Iran warns Cyprus attacks from its territory. JP Morgan CEO warns markets underpricing risk. Wouldn't buy stocks or treasuries at current levels. Middle East nations urge Iran to cease bombing campaign. I mean, it is still elevated. So this is sort of one of the main reasons too I'm considering this that no trade zone, because yes, if we look at something like gold, we know that we aren't getting as strong of moves to the downside as we were when we were getting escalation headlines. But on the flip side of that, we are still getting war headlines. We are still getting escalations. Things are still stronger and more bearish than usual. So to try to just grab longs and even a swing trade at this point, in my opinion, is still a little more risky versus waiting for some type of confirmation. We get a strong headline, a peace deal's back on the table, something that supports gold fundamentally. When we support gold fundamentally and we support it technically, that's when we will see a stronger move. That's when we'll start getting those banger trades intraday, banger trades on a swing trading level as well. So we'll wait and see. We'll wait and see how that wants to play out. Again, in my opinion, where gold is right now, we've seen too many times. Look at this price level right here, where gold's trading right now. You see this green dashed level? Look how many times gold tried to hold that level. Hold it, reverse near it, hold it. Now what are we doing? We're trying to come back to it again. But do you really want to take a random trade here knowing that markets can run through it very easily? Absolutely not. We are not here to gamble. We are here to trade with confidence. So I'm not seeing confidence in gold right now. I'm not seeing an edge with gold right now either. So we're going to wait. I do still have a bit more of a bullish bias myself on gold, but it's a very difficult read. When we see a more difficult read in a market, guess what? We could take advantage of trading another market. Take a look at the NASDAQ, for instance. If we look at NQ here on the daily, excuse me, the one thing that plays out that I really notice, and we take our measurement tool from all-time highs to where we are right now, we hit as low as 12% from those all-time highs. A bear market is technically when we're below 10% on things like the S&P, NASDAQ, gold. We hit 12%. Our 10% level is right here near 28,000 even. That was an extremely strong key level yesterday that we used as support and resistance with FOMC volatility. So what do? We're day trading. So we want to look at now a smaller time frame for entry. Right now, look at the bears. Look at the sellers here on NASDAQ. Down over 3,300 points in a matter of a month. This is the worst July in history, I believe, for the S&P 500. Let's take a look. Let's ask market. How is the S&P 500 monthly performance? Or we could actually look at NASDAQ. I think I'd rather ask NASDAQ as it's had more momentum to the downside. How is the NASDAQ's monthly performance for July? What's up, Jermaine? Good morning, brother. Good morning. Family and friends know I'm learning to trade. They keep asking me to invest for them. That would totally change my psychology. Yeah, definitely. You know, day trading and investing is also, it's a whole different boat. Whole different boat. NASDAQ is up 3% for July from, is that true? I don't know if that's true right there. Where's the beginning of July? Yeah, no, that's not accurate. I'm going to throw that a thumbs down there. We will read some of the information. What drove the month Microsoft AI surge? Yeah, let's throw that a little thumbs down there. Tell it why. Inaccurate. NASDAQ is having its worst July in years, possibly history. That way, our devs on the back can take care of that. But cool. Let's also take a look at some of those big tech earnings. So let's see who has earnings today after the bell. After close. You're in the learning phase and there. Oh, look at this, man. We got Apple and Amazon today. Those are pretty hefty earnings reports. We want to definitely be keeping an eye on those. Apple, Amazon. Let's ask it. Show Apple's expectations and history for earnings. Perfect. Great follow-up question. Again, it's way different from ChatGPT. It's not giving us a whole list of things, and it pulls up so fast. Earnings. Okay, look at this recent quarters for Apple. Up 3% off earnings, 7%, 7%, 9%. So something that we noticed with Apple earnings that we noticed with Tesla and these other big companies as well is the decline. So July 2025, October 2025, this is when AI was really popping. These big companies were seeing that they could use AI to possibly, unfortunately, replace some of their workers. Tons of layoffs. It's a much cheaper option. And then guess what happens? It's great. It's great. It's great. And then bang, here comes the reality. If everybody's using it and they're using all of this AI, they're not just using AI. AI doesn't come out of the sky. It comes from data centers. It comes from using extra energy, which creates higher costs, which creates higher payments, right? If we look at something like SanDisk, SanDisk had a major pullback. Give me a rundown on SanDisk. Let's see. Let's ask about SanDisk, see how it's performing. Now, the reason I want to ask about SanDisk is because it is down, I believe it's over 50%. Yeah, look at this from its all-time highs. Wow, that's crazy. After sustaining its staggering 7,000% rally to 2,354 for approximately a year, SanDisk stock began a plunge in late July that took roughly 57% lower to $1,000. That is wild. Ryder, that's a crazy question to ask. No, unfortunately not. I asked, but he's not. I am, but I know nobody cares about that. So SanDisk, guys, people might be like, oh, well, why is SanDisk so important? SanDisk, that's just a random stock. No, it's, look, market will tell you, it's a computer hardware, right? SanDisk is one of the backbones. It is a memory chip creator, right? So memory is needed for AI. So let's see. After sustaining it, we know, okay, PE ratio is now more sustained at that 33 times PE. 20 to 30 is about the usual in nowadays stock market talks, if you guys are curious on that. Earnings in 6 days on August 5th. Last was a beat, 23 versus 14, a massive beat on their earnings right there. Let's see. Analysis conviction. SanDisk, profitable tech hardware play. Let's ask it. What does SanDisk do? What does SanDisk do, and why did it rally so much? And it should give us an understanding of, okay, because of AI, because it's a memory unit. So here we go. Perfect. SanDisk designs and manufactures flash memory storage products, memory cards, USB drives, SSDs, and embedded storage solutions for consumer electronics, data centers, there it is, and enterprise applications. They're a core player in the non-volatile memory semiconductor space. Yo, good looks, Ryder. I appreciate that. Got to take care of each other in here. The massive rally you're seeing isn't typical. SanDisk price action. The stock trades around 1,016 with $150 billion market cap, which suggests either a significant corporate event, like an acquisition, merger, a major restructuring, or you're looking at post-split. So we're not looking at post-split. We're seeing a major pullback, a huge sell-off, bit of a short squeeze going on there. Western Digital acquired SanDisk in 2016 for $19 billion. Yo, talk about an investment. Western Digital acquired SanDisk in 2016 for $19 billion, and now SanDisk has a $150 billion market cap. That's a nice ROI right there. Here we go. The 7,000% rally was powered by a massive surge in NAND flash memory prices. SanDisk rode the AI data center memory boom that lifted the entire semiconductor storage sector over the past year, peaking at $2,354 in June. Now it's unwinding. The stock is down 57% from the peak, hit by cooling AI chip sentiment. That is beautiful, man. Great. Are you bringing Imre on tomorrow? I know Imre usually comes on Wednesdays. Tomorrow, let me ask him and see if he is around. Let's see. We'll definitely ask him and see what's going on there. The product, again, flash memory storage. So this is sick. I absolutely love. I got to throw a thumbs up on this one. Beautiful, beautiful. Great breakdown on SanDisk right there. All right, let's ask Market 2. What's moving the NASDAQ today? And we could even talk to it. What's moving the NASDAQ today? Hey, listen, way past. What's going on, brother? He says, man, I wish I took some trades on NASDAQ yesterday. I sat on my hands and watched everything play out. Listen, you know what? Sometimes that's our best bet. Even if it means watching it play out and thinking markets are moving without us, that's absolutely fine. If you aren't comfortable with trading that environment, you're better off staying out of it instead of trying to force a trade, possibly getting stopped out, then having it go in your favor, you getting frustrated, emotions picking up, your psychology gets thrown off because of it, you chase, you blow your account, and you're even more upset then, right? Wouldn't you rather sit cash and live to trade another day than force trades again and again and blow the account and then not be able to trade that next day or for a while if you really blow an account? So guys, be patient. Psychology is key. I love what somebody said earlier about how that when it comes to trading, you know, a white belt's 90% physical, 10% psychological. Black belt is the other way around. So I'll put together gains and losers to see NASDAQ. NASDAQ is bullish at 27,727. Microsoft AI earnings beat is powering the index, though Iran escalations and oil-driven inflation jitters are capping upsides around 28,150 target. Standout gainers, Hearn surged 40%, leading the pack. LVWR and I love the integration of tech companies into this and different companies, not just Microsoft, Apple, things like that. This is really sick. Ryder, bro, you're funny, man. We gotta get you on here sometime. I am going to be getting. I'm sure you guys have seen him in the chat before. If you don't already follow him, it is Seb underscore. Oh man, what is it? Don't tell him I forgot. It is Seb F. I thought it was Toro, Seb Toro or something like that. Toro FX underscore com. On Instagram. So basically, Seb from the comments here is going to be joining us for Monday's stream. So great stream there. I will ask Imre and see if he's around for tomorrow's episode. That would be cool to bring him on. So look at this. It gives us our gainers, gives us our losers. That is sick. That is really cool. So let's go back to our dashboard. Let's pull up some charts. Take a look at the NASDAQ. Go to a lower time frame and I'll give you guys some price levels. That's it. Thank you, Piyush. Seb TFX. You got it. Yeah, I was watching how market broke down everything and how to interpret all the data and how it moves. So listen, right? If you're in a position where you're still learning, you're breaking it down, you're trying to gain that edge. Hey, there he is. Bro, were your ears ringing, man? But yeah, if you're in a position where you're still trying to understand the fundamentals, you're not completely confident with trading something like an FOMC day where we get those volatile moves. Your best bet is to, sit out, let it play out, and just watch. You're a spectator before you're a trader. You have to learn how markets react. You have to learn how markets respond. Once you learn those things, that's when you could start to execute. That's what builds confidence as a trader. So NASDAQ myself, here's some levels that I'm looking for on the NQ today. Main area I would like to see a reaction to for a possible short is off of this 10% level. So look how key level this was multiple times, multiple key levels. We even tapped it off New York Open on Wednesday, which was yesterday. Pulled back. We sold off over, I want to say that's 400 points here, just eyeballing. 500, almost 600 points. Yeah, 100 likes smashed. You guys are goats. You guys are goats, man. It's a team effort. We're a community here at Market in the Morning. It isn't just me. It isn't just Jeeve. It ain't just Market. It is everybody. I was hosting Chart Fanatic stream, finished that, and came to the show. One love, Seb. Bro, I watched yesterday's replay. Absolutely killed it, man. Great analysis, great breakdowns. It's cool to have you on those Chart Fanatic streams. And can't wait to have you on Monday for our Market in the Morning stream. Yo, if you wanted to come join now, I would send you the link right now. You come join us for the New York session open. Always happy to bring somebody on. Gives us some more insight, gives a good conversation. Everybody loves that podcast style back and forth, and it does make it easier for the streamer as well to have that conversation. That's why I absolutely love having you guys in the comments be so engaging, right? Tell me what you're trading, how you're trading. What's up, the trading concepts on Twitter? I love seeing comments on Twitter. Very rarely do we get a comment from Twitter. Why? Not too sure, but there we go. Love seeing it. If you're here on Twitter, make sure you hit that repost button. Make sure you hit that like button. Show some love. We absolutely work together here on Market in the Morning. We are a team. We're a community. It's all about love and support. And when Jeeve is on, it's all about calling people. I'm not going to say it. But you guys know Jeeve by now, man. If you know Market, you know Jeeve. And that's great, man. That's great. So yeah, NASDAQ, I'd like to possibly look for a short position off of that 27,980. So 27,980, we have our 10% price level. We have a supply area. We also have key psychological level 28,000 even. So I really want to look for a reaction to this area. Does that mean as soon as price hits, I'm going to go short? No, because guess what? This analysis could be incorrect. We might blast right through it. If that's the case, I don't want to go short blindly. I want to wait to see, do we have a reaction? Do we react? Do we pull back? Maybe we have a double top near this resistance. Maybe we create a low volume area, and that's our pullback entry over here with our stop loss then at that recent high we created. But when I'm finding my supply and demand, I'm finding these key levels or key areas. That's my edge to find those high probability spots where the market is looking to reverse, not for no reason, because markets have shown a reversal from this area in the past. And if that's the case, I'm looking for markets to repeat themselves. The saying is history repeats itself. Guess what? Markets have history, so I'm looking for that to happen. We're much better off looking for that to happen at areas where markets have shown us that history and reaction versus taking a random trade over here thinking this will be our new sell zone. So listen to markets. Markets come first. When can we have our new GPT? Yeah, so that's going to be out August 4th. August 4th for your Ask Market friend over here. Guys, we put some votes in. Unfortunately, I don't think they're going to make it called Ask Kev. So big cry right there. Let's take a look at NASDAQ. What is the time to launch? It's so August 4th, which is, take a look at our calendar for a moment. August 4th is next Tuesday. So you guys will see Ask Market next Tuesday. That's going to be dope, guys. Elsa, did you take a trade? What's going on? Okay, MNQ buys. Got you. Yeah, I mean, listen, I'd like to see, right? We see pre-market. We've been having buying pressure. I'd like to see that New York session open give us a spike. Lately, what we have been doing is getting that little spike off the open. Past few days beforehand, clean sell-off, reversal. What else? Sell-off, reversal, spike, sell-off, reversal. So these market conditions, right, a little range bound. So if you don't have a trade, you're not in a trade, you're waiting for a trade, be patient. If you're a New York session trader, you can be patient because you will have another opportunity. Remember, the markets are always going to present new opportunities, whether it's a short off this zone to take it back to VWAP somewhere over here, or to take it even to the support zone to the downside. Or let's say New York session opens and we get a crazy fast dump. We dump for about 30, 40 minutes. Then we find support. We sweep pre-market lows. We find this area that held as support overnight. And then boom, we hold it again. Then you take a long position. But if you aren't in a trade right now, you do not want to be taking a random one at these pre-market highs that we're at. If you're already in a trade, yes, you can definitely look to hold. Can you please review ES? Of course I can, only because you said please. ES is definitely lining up very similar to the NASDAQ right here, where we have this high from our FOMC. And from that, guys, we ended the stream and it just completely dumped 138 points on the S&P 500 to that area. So what do we want to do? We want to watch that area. If markets were able to give us this massive 138, probably 150 point move on ES from the 74.62, then I'm looking for those sellers that were able to. So think of it this way, guys. Markets move off volume, right? Institutions had to have moved this price all the way lower. This wasn't retail. This was institutions positioning for the shorts. That short positioning volume finally built up and gave us the reaction. So all those orders that possibly weren't filled in this area, because again, institutions can't fill all their position at once. They have to add. Let's say institutions wanted 500 lots short on the S&P 500. They would have to start it with maybe 25. So they get in 25 short here, 25 short here, 25 short here, 25 short, 25 short. They're adding, they're getting in. Then they're in 200, right? They're in 200 lots short, and then that starts driving price lower. Well, then what about that 300 that's left? Well, that 300 that's left is still sitting there. When that 300 is still sitting there, we're looking for that 300 for price to return to, and then to start filling again, 25, 25, 25, until it hits 200, 300. Then boom, we get a similar reaction. So that's the psychology behind some of these strong zones and areas. Call them institutional supply and demand right there. And same situation, even if we're not looking for this full move to occur again, we can still look for the reaction, right? We get a reaction down to VWAP. We get a reaction down for 50 points, 60 points. That's still a massive move on the S&P 500 that I would be happy to take. So with that being said, we want to be a little patient. That is my resistance area on the ES. We can take a look at market here too, MRKT. See that we are bearish bias, but we are at reversal risk. 74.24 is a resistance, 74.24, which is right above us over here. We also have 74.75, which is 74.75. Look at that, 74.75 lines up in my area. That's beautiful. Now we have our market key level right here too. So we can mark this out as our market level. Make it yellow, make it gold. MRKT. So we have our market key level. We have our resistance point. We have our highs from our FOMC day over here. We have sellers clearly, guys, you cannot argue that sellers aren't in this area because look at the reaction we had afterwards, right? We want to look for things that we cannot argue. Trading Concept asking, can you review gold? Absolutely. Absolutely. So we'll look over gold. I do see some headlines possibly coming in here too. Hassett says markets not in bubble territory on AI. Okay, there's our recession indicator. If Hassett's saying no, that's definitely a yes. If you want, you could always hit the little sparkle icon over here and hit explain. It'll give you your market AI analysis. And we will see what does our analysis give us here on market. Let's see. Risk on for AI linked equities. But we got to remember, not every headline is a major headline. Not every headline is an actual risk on or risk off headline. It's just giving you that breakdown. We go to breaking news. Hassett reaffirms confidence in Warsh. That's sort of a good thing. U.S. inflation slows in June, but reversal likely amid Middle East conflicts. That's it. Oh, yeah, New York session, 1 minute to open. Let's see. Very quickly, what do we got? 20 seconds for open. I guess 20 seconds isn't long enough to cover gold. Very quickly, guys, I have some resistance on gold around 41.65, support around 4,100 even. This purple level has been a great key level on gold lately. All right, New York session opens in 7 seconds. Apparently 20 seconds was long enough for us to cover gold right there. Nice quick little rundown. There is our New York session open. Hopefully we get a nice pop right there for Elsa in the comments, who is long on NASDAQ. So hopefully we get that run up. Would love to see 28,000 even. Nice key cycle level. Now, you guys know me by now. I'm a huge fan of looking at equities as well. How are our equities trading? Microsoft had a massive gap up from earnings. That's a great sign. Take a look at Microsoft's earnings. Earnings per share beat, revenue beat. That's fantastic. We could ask market, how was that earnings on Microsoft? Let's see. Oh, look at that. Follow up. Tell me about Microsoft's earnings. Beautiful. How can I get access with it? So, do you already have market? So, to get access to market, MRKT, you're going to go to MRKTEdge.ai. And I'm going to put that on the screen. If you want, if you're watching this on like a YouTube or a TV or a computer, you could scan the barcode that I just put in the top corner to get access to market. But the tool that I'm using right now, Ask Market, is going to be launched officially on August 4th for everybody. So what's driving it? Azure's AI-fueled growth is the catalyst. The cloud platform topped 100 billion as enterprise AI adoption accelerates, validating Microsoft's massive CapEx push. This is a good thing. I'm sure you guys know I've been saying to keep an eye because big tech is spending a lot more on CapEx. If they could get a good thing validating their massive CapEx push, that's a great sign. That is a good thing for the market. So we do want to keep an eye on that. Be aware there, and we will take it as it is. I got to find where that widget is. There we go. Guys, I want to see if you can see. I just put a poll on the screen. Do you guys see that poll in the YouTube chat? Are you guys able to access that as well? It's something that's here on the this is called StreamYard that we're using to stream. I don't know if you guys can see it. Well, I know you see it on the screen, but I don't know if you guys can actually vote on it. Let me know if you guys can vote on that. No, not on YouTube. That's so weird. Why would they have... Oh, there we go. Oh, you write it in the comments. Type 1, 2, or 3 in the chat. Yo, that's sick. There we go. That's really cool. We're going to be using that more often. That is a cool feature. Yeah, check out right underneath me. It says, are you bullish or bearish today? Type 1 for bullish, 2 for bearish, 3 for ranging. That is cool. That is cool, man. 1, 1. There we go. You guys are bullish today? Okay, okay. We'll see. We'll see. Let's see how smart the community is here. Awesome. That's fun, engaging. Robert with the bearish. Okay. No today, but it comes. And listen, if you think we're ranging, type 3. Type 3. You know, my opinion, we're pretty range bound right here. We haven't had that strong catalyst to say we're definitely in this direction. Let's see. 3 range bound. Cool, man. Cool. Yeah, that's dope. Let's see. Does 3? Somebody typed 3, and it didn't go through on that yet. There it is. There it is. I'm bullish till TP hits. Yeah. There you go, Elisa. Elsa. I'm gonna get it right. I'm gonna get it right. Ain't no embarrassment here, guys. If I mispronounce your name, you tell me. Be like, yo, Kevin. Yo, Dum Dum. That ain't it. So yesterday's low on ES? Yeah, possibly. Possibly. What if someone spams? I don't know. Let's see. Piyush, type 1 and just type 1 and send it 4 times. Let's see what that says. See if it has that impact. That's fun. Right now we have 10 votes on bullish. Type 1 like 4 times. We are negative gamma, so upward trend. There you go. Negative gamma, so upward trend may be amplified, but overall sellers have constrained overall upside control. Beautiful. Beautiful. Okay, let's give that time. Okay, so spamming doesn't look like... okay, so it just counted 10 to 11, but I think that 11 is counted from premium over here. No, so if you spam it, it doesn't count. It must be able to recognize who commented. That's sick. That's cool. Yeah, what a dope little feature there, guys. We're going to keep that. We're going to play around with that some more. Guys, don't have too much fun with it now. Nah, that's awesome. That's great. Beautiful. Beautiful. Awesome. Awesome. That's fun. Gold, I do see a little bit of a resistance point right over here. We call this like a supply area. Price where... an area where prices reacted to multiple times, right? And now it's also our pre-market high zone from our recent pivot high. We could look for a sweep into that and a pullback. Now, gold, in my opinion, much more range bound than the NASDAQ and S&P. NASDAQ, yeah, sure, 15-minute we're range bound, but all you have to do is zoom out a little bit to see we're making lower highs and lower lows. So, yeah, overall, we might get this internal trend to the upside. I'd really want to see us hold below 28,100 and move lower. Amazing, guys. Look at that. Our poll has hit. Let's see. 12, 7, about 21, 22 of you guys there. That's awesome. That's awesome. We got 55% bullish, 32% bearish, and 14% ranging. I'm going to hit stop poll right there. We're locked in. That is sweet. Guys, let me know if you had fun with that. That was pretty fun. We'll add more polls into our stream. It's definitely a great thing, too, because it makes it more interactive. So phenomenal. Phenomenal. Nope, voting's over. Can't do it. Now, you know what? We'll keep it open. Why not? Resume. Keep it going. No option for poll. Look at that. There's that spike up. Let's get some buyers in here. Elsa's in some longs. We got to go hit TP for her. Good feature, but don't be a villager and think the signal to take trades. Yeah, exactly, right? Don't look at this and go, oh, 55% bullish, I got to go long now. Just like the same with market. When we're looking at the market terminal and it tells us something like ES, bearish reversal risk, I'm not going short just because it says bearish, but I'm also not going long just because it says reversal risk. We're taking that information and then we're processing it through whatever else the market is giving us, whether it is global geopolitical tensions beyond Iran keep risk appetite cautious, or hawkish Fed dissent lifts future tightening risk. Now, let's actually, speaking of the Fed, let's go to our rates and central bank decision for September. Ooh, look at this, guys. 52% chance of a 25 BPS increase. Remember, guys, markets are always forward looking. So once we start seeing this increase even more, oh, look at this is dope too. You can hover over it and it shows you the change. So very cool. Market's always updating. The platform just gets cooler and cooler every day. Microsoft stock surges 12% in the largest daily rise since 2020. That's great. Nice strong move. And that's also what's helping support NASDAQ. NASDAQ struggling here. Oh, man, it hit 27,920. Elsa, it was so close to that 4.5. Depending on where your stop loss is, I would just be patient, maybe let it play out. You know, you mentioned you trailed your stop loss, which is great, right? I'm a big fan, too. If I'm in a 3-to-1 trade, 4-to-1, and I'm letting that trade run, trail that stop loss. You don't want to be in profit. Let's say you're in a trade, right? And you got long down here off VWAP, stop loss down here, and you're going for this big 7-to-1 risk to reward. You want to trail your stop loss because let's say it moves up and right now we're up 5-to-1. You don't want to let it come from, oh, I was in 5-to-1 risk to reward right here, and then boom, it sold all the way off. I got out at break even. No, trail your stop, and the best way to trail your stop is to use structure. So bring it to recent higher lows. Recent higher lows. This is our more higher low over here. Or if you want to use structural points in your position where you say, okay, here's that 3%. Look at that. That structural low lined up right with that 3 RR trade right there. Real smooth there. I do think these buyers do want to take us a little higher. We are seeing a little bit of selling across our equities. SpaceX struggling a bit here off VWAP. Apple's moving lower. Google's moving lower. Seeing some selling on Microsoft as well too. We have to think too, guys, when we get a huge gap up like that on equities, a lot of people are going to be selling their positions to take profit. But if Microsoft can hold strong, it's definitely going to help keep the NASDAQ higher for longer. Hot like rates. USD JPY falling. Nice. Cool, guys. Cool, man. Great stream so far. It was fun having Gvon. Cool poll. Took my piece. Go Elsa. Yes, sir. Yes, sir. Oh, look at this gold spike right there, right into that zone. 18 seconds left on this 5-minute. So for me, when I find these zones, one of my confirmations to take the trade is the move into the zone and how we close. If we close in the zone, I'm not interested. If we wick into it and we close out of the zone, then I'm interested in that next candle to move into it and wick as well. But right now, we closed in it. So like I just said, I'm not interested. I do think gold might try to break higher here. If it does break higher, could look for a retest and continuation. Now, on the other hand, we also have to take into consideration we did not break this zone. We're getting a rejection right away. We could look to see how this 5-minute wants to close. Dump and close somewhere over here. Do we get then a pullback on the next candle to go short? Or is it just wicking lower now? Look at that, retesting this pivot high, retest to continue higher. So I'd be patient here. I wouldn't go long. This is what I consider a rock and a hard place. We have resistance. We have support. Is this intervention? No, I don't believe so. I don't believe so. Was there any intervention? I don't think so. Take a look at oil. Big fan of what oil is doing now. Oil here on the hourly on the left chart over here. Let's pull that up large, full screen. Again, same situation with oil. We have support right here. We have resistance right above us. Very difficult market to trade on something like oil. I'm not a big fan of trading oil at this time, but I'm definitely a big fan of watching oil to gain that direction, gain that sort of trust in the market. If we're selling off on oil, that does help support a more bullish gold, a more bullish NASDAQ, S&P. Just something to keep in mind. There's that retest and hold on gold right here. I do think we're going to be moving higher on gold if you guys are looking for a position. Not telling you to take the trade, just giving you guys my insight on it. I'm not taking this trade myself right here. I'm just waiting, letting things play out. Looking to see NASDAQ continue higher. Let's see. What's up, Safe? Good morning, brother. Good morning. Let's take a look at our VIX down here. See what VIX is doing, volatility index. Look at that strong pump we had on VIX yesterday by 3 o'clock. 3 o'clock VIX starts to fly. That's when the S&P and NASDAQ started to dump. Guys, I want your input too on the live stream here. Do you guys like this layout that we're doing right now? Or do you like this layout where I'm down over here and the screen's over there? So it would be this or this. I guess this one shows the full screen. Nothing's blocking the screen. This one gives you more screen to look at though. So again, you guys let me know. Here, vote on that in the comments. 1 or 2. We'll call the one that we usually use is 1. New one is 2. The one not blocked? Yeah, I figured. Got to see your on the left. Okay. 1. Got you. Yeah. All right. Cool, guys. Cool. Or we'll do this. There we go. Perfect. Now you can see the chart, right? I'm sorry it's dark today. I'm dealing with a bit of a headache. I had to turn my big ass spotlight off. Let's see. All right, we just got a headline right there. Let's see if that's anything. There we go. NASDAQ continuing higher. Elsa is about to hit TP, about 10 points away from that, smashing it. See what headline just came out right there. Yen suddenly strengthens very sharply. Traders alert to intervention risk. Done TP 701. 7-1. Get her out of here. Get her out of here, 7-1. Damn, guys, we got to bring Elsa on here. Give you guys her trading insights, her strategy, her breakdown. That's awesome. You go. Big W's in the chat there. That is amazing. Let's get some gunshots going off. Boom, boom. We're the stop-loss police. I know. I played around with this StreamYard yesterday, so I got some more stuff for you. It's all Mel. That's great. That's beautiful. There we go. There is that price level I was looking for. There is 28,000 is very close, about 10 points away right there. That is phenomenal. There's that 10% key level we were talking about too. Really great stuff right there, guys. Smash that like button. We are at 127 likes, guys. That's killer. Guys, run that up. Our highest liked live stream, it's like 167 or something like that. And that was one of the streams that Mel joined. And, you know, I think she cheated. She brought an entire army with her. But that's awesome. We love to see that. Strong community is key. Let's see. Look at that. Look at that. This is a cool looking indicator. A little bit of a trick there. There's 28,000. Boom. Key level hit. Beautiful. I'm not short here. I'm not long here. I'm just waiting at this point. We get a strong break above. We could be in a short squeeze territory. Markets could be ready to turn around here. In my opinion, is this the low? I don't know yet. I know Jeeve thinks this is the low. I'm not convinced just yet, but we'll see. That's right, Mel rocks. Absolutely. Her tribe. Can you check VIX daily or 4-hour? Yeah, absolutely. I got you. So VIX right down here, bottom left, which will bring it up to full screen. VIX is known to range, right? VIX is not an asset that makes all-time highs or makes all-time lows. It's an asset that's known to range because it measures volatility in the market. So when we see that, what's one of the few things we like to look for? Well, me personally, I love to mark out key levels on the VIX, 20 being one of those main key levels, because that is where we have a key psychological point. Everybody's taught when you start using the VIX, the main thing is if VIX is trading below 20, that's more calm and certainty in the market. When VIX is trading above 20, that's when uncertainty and fear is entering the market. Right now, look at this rejection off 20, multiple times there. 4-hour, we could take a look, same situation. I have some key levels here. This is where I actually start breaking down key levels on the VIX. $20, this range is from 1979 to 2012. Sounds like we're talking about years. Look at this other key level from 2066 to 2089. Look how perfect VIX reacted and rejected off of that level multiple times. When VIX is reversing, the S&P and NASDAQ are reversing as well. So really clean there. VIX moving lower, helping confirm that uptrend. NASDAQ most likely pushing higher too. That is great. What is going on here? Why is that? Oh, that's got you. I was going to say. NQ, let's put ES in the top left. Perfect, man. Perfect. ES, now the reason I do think we're going to have a ways to go, and I'm not just taking a random short here, is because ES is not at resistance until 74.63. So I'd want to see that momentum. I'd want to see some continuation and follow through. At this point, again, me personally, I'm staying patient. VWAP is rotating higher. VWAP is rotating higher on ES and NQ. It was just held. This is our weighted index chart down here. Look at how we held this point. That is massive, massive. Let's take a look at our fundamentals, see if any new headlines came out. Nothing crazy, nothing crazy. Really just mainly that that Microsoft stock surge right there, 12% in largest intraday move. I'm going to copy that myself and paste it over to my community there so people are aware of that. But that is cool, man. Look how cool you can do. You can copy and paste it and it gives you a beautiful screen grab. 12% single day surge in mega cap Microsoft materially shifts tech index levels and AI trade sentiment. Microsoft is single-handedly moving markets right now. Hey, Kev, can you please go through gold for us on the market dashboard? Absolutely. I got you, Ibram, for sure. For sure. So let's take a look at gold. If you guys want, let me know GC or XAU USD. Obviously, it's going to give us the same bias on market, but whatever you guys want me to cover price level wise. Start with XAU USD. Gold holds near 40.75 as surging long yields and Iran war curbs upside. Yeah, it's going to be cool. It's going to be cool. Ask market is going to be dope. All right, so gold, the bias on XAU USD, bearish with a reversal risk. Why? Look at how cool this is. You're going to hit Y. Gold bearish reversal risk right now. US 30-year treasury yields hit highest level since 2007. This hurts gold. Hormuz LNG transit moves signal improving energy shipping conditions. That's great. So we could hit that. Look at, oh, that's dope. Look at that. You click it and it brings you to where it is. Is it in the flip? Is it what could flip it or what supports it? NAS hit 27,908. Yep, perfect. When do we get the drawing tools on market? The drawing tools should be available on market. If you, let's see, go to the settings icon up here and there should be, let me know if you guys have this, drawings to turn that on. If you don't have that, let me know, and I'll reach out to our back end. I think you guys know the guy in the back end. He goes by Nalab. He's here like, 2 or 3 times a week. But cool, man. This is dope. This is dope. Let me know if you have that drawings tab. Mel was in that trader. Profit was 25,000. Sheesh. Yo, Mel is crazy lately on the trades. You don't have that? Okay. Okay, I'll let them know. I'll let them know. Do product engineering. Users still don't have drawing. You guys definitely don't have the drawing tool. Let me get a few no's or yeses in there, so I definitely know. Look at that NASDAQ climbing. Now, that's a catalyst. That's what we talk about. When we talk about some type of catalyst or move in the market, we're talking about something that can change things. And Microsoft showing strong earnings and it proving that CapEx is valid, boom, there's that 28,100 level. Is a very nice sign. Yo, Yusuf, man, you got her. Yeah, that's great. But great moves right there. If you don't have the drawing tool, let me know. Yeah, yo, man, everybody's at their own pace in their journey. You could be risking $5 to make 25. That's a fire trade. She could be risking 5 to make 25,000. That's where she's at. Everybody's at a different pace. The last thing you want to do when you're learning to trade is compare yourself to the next guy, especially compare yourself to somebody with much more experience. All that's going to do is get you disappointed, make you overtrade, make you oversize, and give you crappy psychology. I'm letting the lab know right now, users don't have drawing tools yet. Any idea on when that will be released? Cool, man. Cool. You guys know we take care of you here at Market. Ain't a doubt about it. I'm liking this area to reject on the NASDAQ up here, this 28,100. But we still have nice momentum, clear trend. Bro, that move on Microsoft was next level right here. I mean, let's look at the daily time frame on Microsoft. Hide the VWAP right there. Look at this. Guys, I gave you this beautiful range for possible long-term positions on Microsoft. We held multiple times. I mentioned earlier how history repeats itself in the market, and that it sure does. If you bought lows in Microsoft 360, it's back at 450 right now. Even if you just bought the stock itself, that is a 23 to 24% ROI. Very nice little move right there and very little risk on a trade like that. Whereas if you swung trade options, that'd be paying you even more because options move with delta and have a much nicer ROI than buying stock does. But with more risk and with more reward comes more risk. So something to keep in mind. VWAP, nice bullish candle on that first 15 on Microsoft. Nice reversal candle there on NVIDIA as well to push higher. SpaceX pushing higher. Apple trying to hold. Apple was at all-time highs yesterday too. So now we're seeing a few start to push more bullish. Apple, Microsoft showing strength. Meta had a gap lower. Now let's take a look at Meta. Earnings. So what's CapEx is really affecting right now on these big companies is their earnings report. So a great example of this is Tesla. Tesla had its biggest revenue quarter in history, not in a couple of years, in history. Tesla's biggest revenue in history, and yet they missed their earnings by 40%. That is a disgusting margin right there. That's because of margin compression. That's because they're spending more on CapEx. All right. Let's see. Maybe one day you can have the 1 minute time frame. Yeah. Oh, you're talking about on market? You know what we saw? Elon Musk. So I saw we are actually working on, it seems like we're trying to get that daily and weekly time frame in there on gold, which is pretty cool. So new time frames, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute. I do believe they're working on the 1 hour as well, which will be 1 minute, which will be very cool. What's up, Chills? Got a question. Do you trade silver? I do not. I do not. The three main assets that I trade, I say four because at some point I was loving, absolutely loving to trade oil. It's been more range bound. Gold is a much easier asset to trade. Silver has been range bound, really been given some crappier price action ever since the tariffs were announced last year. So been over a year, almost a year and like 7 months now since the last time I really traded oil. And that's fine. We have different markets to trade, and that's exactly why. So S&P 500, NASDAQ, gold, these three assets alone is enough for you to find a good trade setup. Once bias updates. Okay, cool. Once bias updates are complete, which is this update over here for this and this, he said he's going to roll out those drawing tools for you guys. Oh, Haley, I appreciate that. We got to be supportive in this industry. You know, it's a tough industry to get into, and it's a tough industry to learn and gain that consistency, have proper structure. But yeah, Elsa, congratulations on your again successful trade. Send me some screenshots of that. Send a trade recap. I love seeing it. That's amazing. Good work, everybody. And guys, feel free to always shoot me a DM or something on Instagram or on Twitter. I'm always down to talk with you guys, break down trades if you want to trade recap with somebody, or even if you want to just review something. My DMs are always open for you guys. US 30 is my nice market where I can read. Yeah. That I looked trading. Cool. Yeah, so US 30, that's the Dow. I don't trade the Dow myself. Does that mean nobody could trade the Dow? Of course not. It just means me. I don't. That's okay. Everybody has their own edge. Everybody has the markets that they have confidence in, and that is it. Ryder, bro, you're funny, man. We gotta hit you up too, homie. Now let's take a look back at gold. I think somebody was asking about gold. Look at that. Gold held this key level perfectly for those longs. So this is a nice little retest area. It's exactly what it did. It pulled back, retested, held inside the supply area. Boom, moved higher. Now you can DM me anywhere. Instagram is trading with Kev, and X is trade with Kev. So you guys could hit me up on those two platforms right there. Shoot me a follow, shoot me a message, spam the like button on some posts, show some love. That's what it's all about. All about support. That's what I love about markets too, man. It's the platform isn't just, oh, here's fundamentals, good luck. It's here's fundamentals and here's support. Here's what's supporting, literally, what's supporting the bias. What could flip the bias? Here are your breaking news headlines. Here's not just your news feed, but your breaking news feed. Let's see. Minhal, what's going on, brother? XAU USD. Is it right to say that gold respected the VWAP level at 40.66 for counter bias buys? Yeah, let's see. Let's take a look at gold. XAU USD. Yeah, so held buys right over here around 9 o'clock. If we were looking at XAU USD, same situation, same VWAP, held and it pushed higher. Book my TP at 41.03. Nice. Boom. There we go. Big W's in the chat. Good job. Well done, guys. People are killing it today. Love to see that, man. 130 likes in here. Let's run that up. I want to hit 150. Gold continuing higher. That is phenomenal. Oil, pretty range bound right here, trying to move lower but pulling back. S&P and NASDAQ struggling, trying to push higher. Yo, if NASDAQ can scale above this 28.1, we'll call it 28.200, I will look to see if we are in for a short squeeze to make our way back towards 28.500. We could be in for a massive rally, and yes, the bottom could be in. So we do want to keep an eye on that. We want to be careful. We want to watch markets, and because we have the advantage of using MRKT, we're able to see, okay, what's bullish on NASDAQ right now? Microsoft AI earnings boosts growth sentiment. It's really mainly Microsoft that's doing it. Risk on. The headline supports a broader pro-growth, pro-equity tone by proving that hyperscalers AI and cloud capex is translating into real scalable profits. For Microsoft, at least, not so much for Tesla. This eases fears that AI data center spending will crush margins and cash flow. So this is great. I've been saying this whole time, keep an eye on those biases, keep an eye on the margins, the AI CapEx, all of that extra spending. Up until today, up until Microsoft's earnings, that has been the case. We only know what the market's telling us. We only know what we hear on our earnings reports, on the earnings calls, on their forward guidance when they have those earnings calls. Now, boom, here's our forward guidance. Markets are pricing in. They say we are not crushing margins on AI data centers right now. It's giving us cash flow, which has weighed on tech and growth valuations amid high rates and geopolitical uncertainty. So it weighed against that uncertainty and geopolitical tensions. That is great. The key watch points now are whether other AI leaders can match Microsoft's profit conversions and whether bond markets reprice lower recession odds and higher for longer risk policy. Yo, this is sick, man. Click Microsoft. The headline reflects a clear earnings beat driven by cloud and AI, confirming high return capex and improving sentiment on Microsoft's ability to monetize AI at scale. Much easier to trade. Yeah, much easier to trade a bullish market. Bro, much easier to trade a trending market than some of the ranges we've been seeing lately. Microsoft's continuing higher since the open. We are up about almost 300 points. We are up 300 points on NASDAQ right there. Great move to the upside. Very clean. Great to see it. Boom. Gold smashing to the upside. Bitcoin, I know there's sometimes a Bitcoin trader in here. We could take a quick look at that. Bro, Bitcoin, no way Bitcoin gave another short. Boom. Pulled back. I'd look for this area for possible Bitcoin shorts. However, if Microsoft stays bullish, NASDAQ stays bullish, equities, we're back on a risk-on environment. Guess what we could look for? We could look for a break of this level, a retest of that 65,500 area, and then some longs to target this recent high. So that would look something like this. Bitcoin, aka Fugazi, bro, agreed. Absolutely agreed. Let's see. Nice move there. Very strong. We are currently bullish right now. Let's see. Gold holding up. Gold at previous day high. Swept previous day high on gold. Don't go buying highs. It's something we never want to do either. As much as we do want to be long while markets are rallying, we want to be the trader that buys that pullback, not the trader that buys the highs. Next scenario on NASDAQ. Great question, Yusuf. I appreciate it. Great question. Now, I'm looking at NASDAQ right here. I'd really need to see us scale above, like I mentioned before, 28,200. We scale above 28,200, pull back towards this 28,150 area. Look for those longs to target 28,300, 28,400, and then 28,500. Really looking for a strong move here. Listen, I tell you guys all the time, markets need a catalyst for momentum. Markets need a catalyst for a range, for a reversal. Markets need a catalyst, period. Without a catalyst, you'll get a range. With a catalyst, you can find momentum and a reversal. We had a catalyst with Amazon earnings. That is big tech earnings. That is giving us confidence, good forward guidance, confidence that AI might not be as expensive as we thought, which again, in my opinion, it's just going to get more expensive from here until they figure out a cheaper opportunity. But yeah, above 28,200 retest, and we continue along. And yes, this might be the lows. Could also be, let's see. Look at this, something I want to mention. We had lows at the end of the month too for March. March, we sold off. Here's March 30th. March 31st, we rallied 4% off the catalyst of a ceasefire. Now here we are. Here's the beginning of July right here, July 1st. We were down over 10% in this single month. And now, boom, what are we getting? We're getting, hold up, measurement tool, where are we at? We're getting a 3% rally, a 4% rally, a 5% rally, 6, whatever the case may be. I said 28,500 would be a nice upside target. Very possible in these markets. That would be a 4% rally in a single day. That's a catalyst. That brings us back within this range. So take a look at markets right here, guys. I want to show you something. Let's get rid of that. Let's up this, make this blue. Opacity, great. This was our range in the market, right? Between lows of 28,600, 31,173. This was our range. We could be looking to get back within that range with this catalyst. That is clear and that is very clean. So awesome stuff right there. We'll look to see how markets want to react. I'm going to actually not keep this. I'm going to put a different tool out there. We're going to use the, where is it? Parallel channel. So do high to low. And we want to match that low up with as many touch points as possible. We're at 28,591. Very cool. I'm a bit confused with FOMC. So yeah, you have every right to be confused on it. It was definitely an interesting read, an interesting reaction. So the initial reaction we had when we had FOMC yesterday was bullish. Now, we weren't bullish off FOMC because we had VWAP there. We were bullish because we held rates steady. We didn't get a rate hike. It was a breather for the market. When we have a breather, that means markets are seeing a little bit of relief and are able to breathe. That's going to give us that first initial bull move. Then what happened? Warsh talked and talked and talked. We moved higher, higher, higher. And then reality set in. And we had that big pullback all the way back lower, which lapped this bull move right here. Strong move where basically the reality comes back in and says, okay, well, yeah, sure, we're holding rates now, but now, like market is showing us on our rates right here, rate decision for September, we're still looking at that 51% chance of a rate hike going forward. Boom, reality sets in, we start moving lower. But then what happens? Microsoft earnings, yay, we beat it, we kill it, hooray. And then boom, we are up since these lows. Almost 1,000 points on NQ. And like I said, I'm looking for 28,500 today. That would bring us up all the way up to 1,200, almost 1,300 points on the NASDAQ from those lows. Very possible. Believe it or not, that is a very possible move. It is not something that's impossible. It's not something that's probable on just any random day, but on a day after we get strong earnings like that, that's when it can happen. Absolutely. JPY, let's ask market. Let's ask market. What's going on with JPY right now? What's going on with JPY right now? That explains all the games of layoffs. Yeah, right. No joke, no joke. They're like, oh, good, AI is cheaper, and we can lay people off again. Hooray! Like, come on, it's horrible. Ooh, look at that big drop on JPY right there. Yeah, is that what you guys are referring to? This huge drop? USD JPY is tumbling sharply on intervention fears. The pair spikes down to 160.03 after flirting with 163 earlier. The biggest one-day drop since December 2022. Guys, stats that you'd have to do your own research or you'd have to Google and possibly find it. Market is answering for you. So very clean there. Markets are on high alert for official MOF FX intervention after the sudden yen surge. Intervention risk is the immediate driver. Headlines confirm that yen soared and suddenly strengthened very sharply this morning, sparking concerns Tokyo finally acted near the intervention watch zone. No official confirmation yet, but the price action alone is unwinding carry trades. Geopolitical backdrop worsening. Fresh Iran escalations. IRGC claimed an attack on Kuwait airbase housing U.S. forces. Plus, NATO Poland tensions are lifting oil and safe haven yen demand, compounding the squeeze of USD JPY longs. Yield gap regime still intact. The 260 BP Fed Bank of Japan differential keeps the. Let me zoom in a little bit here. Keeps the bullish structural case alive. Bias stays bullish intraday with 162.5 target and pull back 159, which we are getting close to that 159 right now. Let's see. Yen drops. No, so no, yen suddenly strengthens very sharply. Traders alert to intervention risk. So again, we didn't get confirmation of the intervention just yet, but it's something that is fearing, right? Markets are putting fear on the table there. Yeah, good call, Yusuf. NASDAQ pulling back. This is exactly why. Look, my trade setup was above 28,200, retest and go. We swept previous day high, and then we pulled back. Let's see, pulled back 28,178 to 100 points, 100-point pullback. Imagine trying to buy NASDAQ long because you don't have any of these resistance points, and you're just like, oh yeah, let me take it long up here, and then instantly markets run against you. You would think there's a market maker over your shoulder waiting for you to enter a trade. Meanwhile, we know that that's not the case. It only happened because you forced the trade. It does look like NASDAQ's in for a deeper pullback. In my opinion, something I would be interested in and that would keep me bullish is a big enough pullback towards VWAP. VWAP keeps curving higher. We pull back, pull back, pull back, hold VWAP, possibly sweep this low of day, sweep it, hit it, reverse, bop it, twist it, and we move on higher. So that's something I'd be keeping an eye on and on the NASDAQ right now. So 2 trade setups on NQ, break above, retest and continuation, break back below towards VWAP, hold and move back higher near 27,800, 27,750. Gold also pulled back off the previous day high. Look at how similar they are. Previous day high on NASDAQ was rejected to bring us lower. Previous day high on gold, rejected to bring us lower. Very similar price action. Previous day high and low, I can't stress it enough. You want to use it. It's a great key level. It's a key level that any strategy, opening range breakout, initial balance, institutional, they're keeping an eye on that previous day high and low in today's open. What is VWAP again? Great question. So VWAP is the volume weighted average price. So basically it's the average price within volume and price. So it's not something like a moving average. A moving average is going to read price action and volatility off of the candles. So if you have a 9 EMA, it's going to hug your candles very close. If you have a 50 EMA, it's going to be a little further out. Vladimir Wap, that's hilarious. That's great. But volume weighted average price, it's sort of where the mean is for the market. It's where a reasonable price to buy or sell is. Whether if we're above it, it's a good price to buy, or below it, it's a good price to sell. So think of it like a static, or I guess dynamic, support and resistance level. Gold, right back to that area I said I was looking for a retest, and it wicked into it, closed above it, wicked into it, trying to close above it again. Possible interest in gold longs here to target new high of day near 41.80, right off of this level. Let's see if we can hold. I'm not taking this trade myself. Might be a bit more patient. Let this 5 close out. See how we react down here. Look at this. GC over here also try XAUUSD, I should say, tapping in. But this could just be the retest of this area to take those longs. And again, play it out to new high a day. 3-to-1 risk to reward. This is the type of trade that we can say, okay, boom, 3-to-1, I take it, I lose. Okay, I take my next trade, no problem. Whereas if you take 1-to-1 trade and you lose, you're like, oh shit, now I got to make 2 trades to be in profit. So that's that too. Guys, let me know, how do you like the background here, market in the morning? I made a new background. I'm going to show you guys. Oh, wait. Oh, wavy. Look at that. I animated that. Fun stuff. Love to see it. Gold trying to hold. Could also keep an eye on the dollar at this point. See what dollar's doing. DXY. Dollar selling off with strength. That supports gold to the upside. So yeah, I'm looking to see if this area wants to hold on gold. No, I didn't mean to rhyme. It's good. Thank you. Thank you. You add a clock. Tazzy, I know you asked about the clock. Bro, I was on last night for like an hour going through StreamYard tutorial style videos, which is the platform that we use for the live streams here. And it's got banners. It's got, I'll show you everything. It's got this cool little like and subscribe guy that pops up over here. What else? What else? A little breaking news, Q&A. It's got a timer. Look at this. It's got a bunch of fun stuff. Obviously, it's got all the sound effects. What else? What else? Oh, we had style. Where'd it go? Where'd it go? widgets. We have the poll. We have a QR code. So anybody that watches this on their TV or whatever, or on their computer, their laptop, they're able to scan it with their phone and get access to MRKT. But no clock. There's got to be a clock somewhere. No, you know what it is? I know, Ryder, it's like, I don't need a clock. We don't need a clock. Clock for what? The clock would actually be very helpful for some of you guys as well, because then you could go over the market, the trade recap, the stream replay, but it'd be a lot easier for me too to then be like, okay, when the clock over here in the top left corner hit this time, that's when this clip occurred. That's when this happened. And that would be pretty helpful. Yeah, rewatching the videos easier to skip to sometimes. Yeah, exactly. The only clock or time that you would really have in terms of the stream would be the YouTube stream replay time, where it tells you like this is a 2-hour stream. Here's this spot. Here's that spot. Let's see. Yeah, well, you know what? Maybe yes and no, because even we have the time down here on our chart. Kevin, when you started, what did you use to trade? So great question. When I got started trading, I got into options. I was big into options. I was trading options on big tech companies, Apple, Microsoft, not Tesla at that point, because Tesla was crazy expensive for options trades. A little bit of Nvidia, Google, really Apple, Microsoft. I was even trading like JP Morgan, things of that nature. Gives you strength, gives you confidence, and it gives you the ability to have different sectors, watch different options, watch different companies, and bank sector might be outperforming the tech sector one day. I want to be trading or swing trading JPM call options or whatever the situation is. This gold trade looks like it might try to play out here. I'm definitely leaning more bullish on gold from the zone than bearish, especially with that dollar weakness. Look at the dollar is falling out of the sky right now. But I got into options. Options were okay. They were pretty fun. I liked, again, the ability to have different assets to watch. But it wasn't until I really started trading futures that I was finding more consistency, finding more confidence, and it was a bit easier on the risk side for me to say, I'm taking this trade here. I'm taking 2 micros. My max risk is $150, $200. Set risk. Options, you can get a contract for how options work. I'll show you the options chain here on TradingView. Let's look at the SPY. So SPY options. Let's see. Okay, so you see the ask and the bid. So that tells me 187. So that tells me that the SPY call for a 739 strike price right now is at $180 per contract. Now it's at 177. Look how fast it fluctuates. If I got in at 176 here and I had a stop loss of 140, 130, it could blow right through that stop loss and I could lose more than I was set out to risk. However, no, I'm not in gold right now. I don't like gold. I haven't liked gold for the past month. Look at it. It would have moved towards stop. But the question becomes, does that mean this analysis is wrong? This analysis isn't wrong until we break back below this resistance point. We hold back above, great. We could possibly look for the 15 to give us a reversal. I'd maybe wait for a 15-minute candle to close, but just be patient right here. But so again, options, they're great. They give phenomenal ROI, return on investment, but you can also lose a lot too. But with that being said, if you got that contract for 178, the max you can lose is that $178. You can't lose more. Whereas futures, if you are on your own account, you have a stop loss and there's slippage, guess what could happen? You could lose a lot. So it's just something to consider. All things are to be considered when it comes to trading. Just passed my first eval ×5. Let's go. Been trading for 3 years. I would like to say thank you to you, Kev, with help learning fundamentals. And obviously Mel. Gemma, you go. That is awesome. Oh, I'm so happy to hear that. Big shout out to the Mel and Kev duo right there, giving you guys good fundamentals, giving you guys some good technical strategies and stuff. That is dope. That's fun. Guys, if you are here from HTL, no, I'm going to leave it as a surprise. I'm not going to say it. I'm not going to say it. We'll see. Next week will be exciting for you guys. Yeah, I don't like how that gold closed. Something that's really sticking out, right? Dollar is selling off like crazy right now, and yet gold is failing to find support. Want to be very careful. When can we see Mel again? Well, listen, man, since you guys are asking, you should go, girl. Since you guys are asking, we'll have to bring her on again sometime soon. It's already towards the end of the week. We won't bring her on this week, and possibly next week, possibly the week after. You guys are just going to have to keep staying tuned to find out. Dollar moving lower, oil trying to move higher. NASDAQ struggling at this point. NASDAQ had a beautiful run up off the open. Since then, we've been sort of, like I mentioned, rocking a hard place where we have resistance at previous day high, but now we have support below us at this broken supply area. So we could squeeze, break down to the downside, find support, and break back out. We could hold right now, right? Hold this right here, break out to the upside and hold and stay bullish. Whatever markets want to do, we stay prepared and we stay patient. At this point, same situation, no trade zone. Good stuff, good stuff. Yeah, holy fallen gold is right, man. Look at that, dude. Swept previous day high into a resistance point. This is an area. Look at gold real quick. This is an area that gold has rejected once, twice, now 3 times, really 4 times right there as well. I'm sure there was a 5th and a 6th. Yep, a 5th time, a 6th time. This is a very strong point of resistance on gold up here that we reacted to. Does that mean I'm just taking a random short? No. Does it mean I'm taking a random long going into it? No. It means context is key. Dollar's dropping like it's hot right now. Guys, keep running that like button up. We're at 134 right now. I wanted us to hit 150. We'll probably hit around 140 today. So hit that 140 mark. Let's do it. Phenomenal stream. It was fun having Gvon this morning as well. All right, guys, let's see. Good support there. I'd wait. Right now, I'd really be patient on gold. I mentioned look at the 15 for that possible reversal and look at that wick it's creating here, but we still have 7.5 minutes left. That's plenty of time for it to push back lower or even reverse and push green on this candle. So with that being said, as long as we hold this recent higher low we created, we're still bullish on gold. Be patient. Be patient. Dollar dropping still supports gold. NASDAQ holding up. Equities, take a look at our equities right now. NVIDIA, new high of day, that's great. Google holding, VWAP trying to push higher, that's bullish. Meta trying to hold, nice drop on Meta. Microsoft seeing a little bit of selling pressure, nothing strong enough to really give us a move though. Apple range bound, look at this, big red flag. Big red flag. Chop, 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 chop. Chop, 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 chop. Chop, 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 chop. Chop, chop, chop. Chop, chop, chop. Our equities are in the chop shop right now. They are not giving us trend. They are not giving us continuation. If they are not giving us trend and continuation, we don't want to be forcing that on NASDAQ. Now, yes, NVIDIA, on the other hand, is moving higher. That would help support the NASDAQ. I like trading silver because while it moves very similar to gold, I get more off silver than trading gold. The problem is when it doesn't completely follow gold's movement. Got you for sure, for sure. What do you mean by you get more off of silver than trading gold? Like risk to reward wise, what is it that you feel you do better on silver than you would if you were trading gold? Yo, Piyush, brother, it was a great having you in here. I appreciate you always being engaging in the chat. This is community here, and you are a strong and important part of it. But yeah, way past. Let me know for sure. For sure. Wow, look at that. I said plenty of time for it to wick around, and to just that, leave gold alone. Take it easy, guys. Don't chase trades. It's easier to find another trade than more capital. Yo, I gotta print that out. I gotta put that on a poster board somewhere. That's beautifully well said. Let's see. Let's see. Guys, it is 10:24. We're going to be wrapping up market in the morning in about 5 minutes or so. Let's see. Gold trying to hold doesn't mean. So guys, if you look at this and go, okay, gold's holding now, I got to go long. No, because guess what? If you looked at this candle, you would have thought the same thing. You would have been stopped out. You looked at this one, got stopped out, got stopped out. The first sign of buying doesn't mean you're a buyer. That's why we do not want to be the first mouse to fall into the trap. We want to be the second mouse, which is after the move actually occurs and starts to pull back and give us our entry to confirm that we're holding, so that that first mouse gets their neck snapped and we get our cheese. It's all about the cheddar, baby. Yes, sir. Yes, sir. Guys, let me know. Drop a W in the chat if you had a winner today. Drop a, I don't know, drop an M if you haven't. I don't like L's. We don't take L's here. We take lessons. So basically, if I traded 0.1 on silver off the 8 a.m. hour just now, it would have been about $400. Off gold, it wouldn't have been as much. Okay, so that's sort of sizing too. So right, if you were in that 0.1 on, let's say you were on 0.2 on gold then, because it's got that ATR difference, you'd still be able to have that that same price amount, right? So that's about sizing. I Kevin also have trading, guys. See you guys. Have a good one. Take care. Take care, everybody. Guys, let's see. Let's see. All right, listen, man. It happens. It happens. Every day is a learning lesson. You have to, when you're in a position that you aren't taking consistent payouts, you aren't just printing like you should, or you're just trying to still figure things out. Every day, whether it's a winning trade, a winning day, a losing day, is a lesson. You have to be learning something. That's why journaling is so important. That's why creating a pre-market prep is so important. Without any of those things, you won't have routine, so you won't be building on consistency, and you won't know what you're doing right and wrong because you're not journaling and reviewing. Reviewing is so important. All right, ladies and gentlemen, this has been a phenomenal live stream. Smash the like button if you haven't already. You guys are great. I appreciate you all for being here. If anybody has any questions, you guys know where to find me. I dropped my Instagram earlier. I'll scroll up real quick and see if I could find it. Instagram, though, Trading with Kev. X is Trade with Kev. DMs are always open for you guys. You want to shoot me a message, even if you want to just go over a trade recap. Feel free to reach out. Don't hesitate. I don't bite. You guys know that by now. It's all about support and bringing each other to that next level. Is there a good platform for journaling online? There are a few. There's like, what's it called? What's that? TradeZella. TradeZella is like a monthly fee subscription. I have my own sort of pre-market routine tool called Morning Mentor. That's pretty dope. Let me just log in real quick to that. Where like you go over your morning routine, say, okay, plan one, I'm going to go over futures, ES, what session am I trading, any economic events, psychology check. Then you go to your bias and levels and say, okay, today I went over ES. It was looking bearish. I had my levels. I inserted my screenshot. Then I go over the scenarios. You create your scenarios and you lock in your plan. You're able to share it with friends, do what you want. And then when you lock in your plan, you're also able to log your trades, put your screenshot, outcome, P&L, and any trade notes. You can also add other trades that you took. Pretty cool there. You guys could check that out. That's themorningmentor.com. That's a one-time fee. I wanted to create something that wasn't like another subscription based. So that's one-time fee right there for themorningmentor.com for you guys. Other than that, guys, have a great rest of your day. This has been a phenomenal live stream, a great breakdown, and this has been great. Great stream. G was amazing earlier. We're all doing good. Got to take our time in the markets. If you didn't take a trade, I didn't take any trades today. That's fine. Not every day is going to be a day where you take a trade, because if it is, you're forcing trades, and that's not worth it. So guys, have a great rest of your day. I will see you all tomorrow. Peace.